Good morning. Eric Clark here with you. I am the founder and president of Lewis and Clark CRE Group. I am brokered by eXp Commercial. I live here in Sewanee, Georgia. Prior to that, I was living over in Cartersville, Georgia, in Bartow County. Today, we're going to discuss something that I feel is just so important: how to make smart real estate decisions and how those decisions are made. Mostly going to look at maybe from the seller side, but also from the buyer side and possibly the investor end user side. A little bit about me: when you see my designation in print or you see my business card, you'll see the acronym CCIM following my name. CCIM stands for Certified Commercial Investment Member. Less than 7% of the commercial brokers within the country have their CCIM designation, something I'm really proud of. What does it do for you? It helps you to understand the analytics and the numbers that drive real estate, from the financial analysis to the market analysis to site selection, understanding governance and entitlements and everything you have to go through, how to project, how to foresee what's taking place. You know, one of the reasons why Wayne Gretzky, the great ice skater, was great, he always said, well, when he was asked, why are you such a great hockey player? He always said, well, my dad taught me one thing: always skate to where the puck is going. There's something to be said about that, about real estate, the timing of an event, the timing of a sale. How do you capitalize on your asset and get the maximum value? So today, we're going to discuss something I feel is very important. It's the CCIM four-step process, or better known as the CCIM strategic analysis model. And what's that mean to you, the client? So let's take a look. Number one, market analysis. Identifying the high growth opportunities. We begin with a micro and then a macro level analysis of the market. What does that mean? You study the demographics, study traffic counts, infrastructure, new jobs that are coming in the community, new employment that's coming in the community, shifts in the community, zoning, what's taking place, new infrastructure. We look at county and city growth plans, districts of the schools, what their expansions are, infrastructure, roads that are being improved, 2-lane roads that are becoming 4-lane roads, interstates with new intersections, new industries that are coming into a community. What's driving the financial data within that county? If you understand that, you understand your position of your market. You need to understand absorption rates, how it's affected by commercial end users, and so on and so forth. Give you an example. Let's say we're evaluating a 50-acre site in Gwinnett County. We don't just look at the land. So many times people say, well, I have a beautiful piece of property, or they're driving by this piece of property and they think, well, why hasn't that piece of property sold? Well, there's reasons why the property hasn't sold. There could be some wetland delineations. There could be some soil problems with the property. There could be county regulations that aren't allowing the best end use for the property to be used or developed for. That may take time for the county allows something to take place that maybe it should be a multifamily unit, but the county is not allowing that type of density, meaning that many doors per acre. So there's a lot of things that come into place. Utilities, what sewer is there? So let's say you've got this acreage and in Gwinnett County. So we have to look at what's taking place within a 5-mile radius. It's very important. Highways, and also what's taking place nearby with other developers. What are they developing near you? Understanding this will help us to then maximize the value of the land. When you know everything's taking place around you and you're informed, you can make a best decision on what's the price of my land and what's the expectation. What should you receive for your property? Remember, you only get one time to sell your piece of property, just once. And it's my job to make sure we maximize the asset that you hold. And I think we do that better than most. A lot of realtors understand their local market. They understand their community. They understand their county, and they do it really well. Living in the greater Atlanta metropolitan area, we understand the economy from a global scale. One of the things that I bring to the table, I spent 30 years in an international business that I ran, and it allowed me to do contracts in over 70 countries and travel to 34. So I bring an international network and an international approach to my markets. I'm not just bringing regional, national buyers. I'm bringing international buyers into the greater Atlanta market. That's got significant value to you, the property owner. We can talk about that further in other segments that we might do. So, you know, 3 times in 3 separate counties, I've been able to bring the highest value per acre per in use for my client. That's something I'm really proud of. I've actually had developers tell me, Eric, we're paying more for this piece of property than we're paying just 2 miles down the road. And I simply look at the developer and say, well, that's because I know the value. And they don't say anything, they just sign the bottom line. So for you, the seller, that's very important. Step 2 in the strategic analysis model is the financial analysis, ensuring that profitable investment decisions are made. And how do we do that? We run the numbers. The numbers don't lie. You have to understand the analytics. This means we're breaking down hard costs, soft costs, financing terms, projected returns to make sure the deal pencils out. I may be representing the seller, but I have to be informed on what the developer is going through and what they're willing to pay. And so I have to understand how they pencil out their side to best represent you. And that's something that we do a really nice job of. We look at key metrics that might be in place. Perhaps you're an investor and I'm helping you buy and secure a property. We're going to look at your internal rate of return, what the cap rates are when you buy and when you exit. We'll look at net present value, break even analysis. We'll look at land residual calculations, and we're sensitive to the market because the market's always changing. It's always changing, and you have to be in the know of these things and understand what's taking place within the market. Let's say you're looking to buy a 100-acre parcel and you want to buy it and possibly sell it as an investment opportunity. We can model what that looks like. We can model your holding period. Is it a 5-year, 7, 10, 12, 15-year hold period? What's your return going to be over that period of time? If you bought it with financing and some cash, what's that look like? If you bought it all with cash, we can model that. We can look at your returns. We can look at your returns if you decide to add capital to it and do improvements, or you do nothing. So all of this comes into place. And when you look at that, you can support your returns for your targeted return that you want to have. And working with our clients, we run these financial metrics. It's a key aspect to our success. It's a key aspect to our clients' satisfaction because we take great pride in bringing satisfaction to our clients. And this is where the emotional, subjective part of real estate is matched with the data. And it's all about making sure the asset fits the user's need, whether that's an investor, a builder, a retailer, an owner occupant. Need to take all those things in consideration. We also consider the size of the property, zoning, access, visibility, proximity to workforce, the customers, who's the customers going to be. Building layout comes into play. Is all the land usable for the building, for the development opportunity? We have to take in, environmental studies that are done, wetland studies that are done. And in some places, we have to take into account Indian tribal requirements. We have to take into account and make sure we're not on something that might have been perhaps a cemetery or a community that was once housed and homed an Indian community. So we have to look at all those things, and all those things come into play when we go to sell your property. You have to be familiar with those and what the steps are. And that also helps guide your expectations of the process. I have now been fortunate and blessed to assemble up to about 750 acres in North Bartow County. And I'm working with the master plan development company who has selected this site, not just based upon price, but also based upon projections, workforce density, the new county growth that's taking place, highway improvements, new exits off of I-75, and everything they were looking for. I was able to bring them through the analyses, a proposal that checked all their boxes. And now it's going to be housing close to over 3,500 new doors, new homes, new residents. So a lot of work goes into the front side of it to understand your property before you can go to sell it. If you have just one time to sell your property, and you got one time to maximize the value of your property. And so much more goes into it than just knowing a broker or a realtor who's going to stick a sign up and try to sell your property. There's the investment analysis, maximizing long-term value. Well, what's that look like if you're just selling a piece of property? Well, if you're selling a piece of property, you may not be thinking long-term analysis. That's a mistake. You know why? Because that one transaction when you sell your property is going to lead to other transactions possibly. You may be looking for 1031 exchanges. You may want to hide some of your money from taxes. You may want to invest again in another opportunity. So we do that financial analysis for long term. And it really separates us because we bring you services that a lot others aren't bringing that you want to consider. What am I going to do after I sell this property? And we may represent different people at different sides of the closing table. We could represent a seller, buyer, or an investor. And this is applicable to you as a landowner, the land seller. And you want to understand these strategic decisions before you sell. Because if you understand it before you sell, most likely you're going to get the best maximum value for your asset. So our focus areas help us to develop exit strategies for you as well. If you buy, what's your time period of owning the piece of property? And one of the most important decisions you can ever make if you're the buyer is, when am I going to sell? And you need to have that understanding before you buy it. That's where a lot of investors make a mistake. They don't have their exit strategy in mind prior to. So other key things that we got to look at is, what's the future economic development within the community, zoning criteria, so on and so forth. With commercial real estate, if you hold it over a period of time and then you sell it, and then you go into a 1031 exchange, you can benefit with commercial real estate different than any other investment. Here's how, and here's why. Not only will the IRS possibly take money from you when you sell your property, and you need to understand what's that value, how much. Maybe you have your land in a conservation and you're on year 7 of year 10. What's that consequence mean to you at closing? What's your penalty going to be? You need to understand that. We can get those answers for you. But then after the sale, maybe you want to do a 1031 exchange. That is a vehicle that can help you not pay as much to the IRS. But also, commercial real estate allows you to do this. It allows you to use the depreciation benefits that come. There's depreciation that you can take advantage of on a piece of property. The interest that you pay into the property can be a write-off. All of these things that you can do can help offset your tax basis, and that's important. And those are decisions you want to make on the front side, because if you understand on the front side what your benefits are going to be, you can make a more informed decision moving forward. So we take great pride in educating our clients, informing them, so we can quantify and qualify the decisions that are going to be made based upon the analytics. I want to say it again. Real estate is only investment that allows you to offset your tax gains with deductions, from tax deductions, including depreciation, interest expense, operating costs. This will help offset your taxable income. And that's something that we bring to the table. When you're selling your property, you want to know the answers to these questions. So happy to discuss this more. I can break each one of these down more with you one-on-one. If you'd like to see a video that's maybe geared more toward investors or landowners or just general education, please let me know. You can contact me, Eric Clark, eric.clark, ERC.CLARK at expcommercial.com, eric.clark at expcommercial.com. You can reach me on my website at www.lewisclarkcre.com, lewisclarkcre.com. You can find me on LinkedIn. You can also text or call me, 770-878-7334, 770-878-7334. If you find me on LinkedIn, Facebook, my YouTube channel, like, subscribe, friend me. I like that. That's all good. And until next time, be blessed. And remember, Eric Clark here, and I find great value in developing and in investing in land and in lives. And I look forward to speaking to you. Thank you.